Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 7th of June 2019, so welcome everyone. Welcome to this Friday's morning session where we're going to have a look at the markets, a few of the charts, a few of the instruments that we looked at this week. As always, but before we do that, before we start jumping into the charts, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the Footsie 100. Now, looking at this one here, and I've talked about this one previously and this week, and basically what I was saying, that keep a close eye on this little tentative downside resistance line taken from the high of the 22nd of May, and you can see that we had the index traveling towards that line. It tested it, but then the next day, on the 5th of June, it broke it nicely to the upside, traveled higher, tested the 200 EMA on the 4-hour chart, and then reversed back down, but then kind of still got held near this downside resistance line, but this time from above, of course, which played out as a nice bouncing ground for the price again, and we saw this one traveling back up again. So what's happening right now is that we are near this other downside resistance line taken from the high of the 23rd of April, and this is going to be very interesting to see what it does, because currently looking at the cash index, looking at the cash index of FTSE 100, we can see that the price is already very close. It's above the yesterday's close, of course, and it's near this 7,280 zone, so just slightly below that. But we're going to keep a close eye on it, because if it continues to push higher, and if we see this nice good break above this downside resistance line, then, well, this could be opening the path towards some higher levels, especially if we see the 4-hour candle closing above that line, above this level, the 7,280. Then, like I said, this could be a good sign for a potential further move higher. So in a way, we can shift our arrow here a little bit like this, and the area that we're going to be targeting is going to be around the 7,370, marked by the high of the 21st of May. Now, this is where the price could stall. That's why we're not going to drag it further up here. First, let's go step by step. So let's see if it actually manages to reach this area near the 7,370. But before we can consider that area, we need to see that nice good clear break and a close, at least of a 4-hour candle, above this downside resistance line and above this 7,280 zone. So keep your eyes on this one. If this suddenly drops back down, and let me just adjust the level here, guys. So if it drops below this little area right here near the 7,200 zone, now this is where it could become interesting again for the bears. We could see this one falling further towards this 7,150 zone, which previously acted as a good area of support. Now the more important one could be this one right here, and let me just shift the highlighted area right there. There we go. This is going to be our target if we see a drop below the 7,200 level. Of course, before, like I said, before that, we will aim for the 7,150. But if that fails to withhold, then yep, 7,080 or even the 7,065 this potential support zone could be a nice area to be tested. But again, first we need to see a drop below the 7,200 level. Jumping into gold. Now, gold has rallied quite a bit, let's put it that way, if we can say that, of course. But looking at this picture here, I mean, when I was covering gold this week, I was expecting a small maybe correction, maybe a bit of a better correction, but as you can see, how strong the rally was, and it traveled all the way here to test the 1344 zone. So it didn't quite reach this key area of resistance near the highs of February, near the 1346. As you can see, it failed to reach that by a few bucks and reversed back down. So there are some levels that were tested previously acted as resistance, but now, I mean, some of them are becoming irrelevant in a way. Like for example, this area right here near the 1333 zone. So it did make it, did test it, broke it to the upside, and now it's kind of violating this level. So in a way, we can get rid of this for now, just to kind of tidy up our chart. What we're going to do here now is we're going to aim for this little area, which played out nicely as a good area of support and resistance, of course. And this little level here is near the 1328.50 zone, approximately there. So in a way, if we see a drop below this of course could start worrying the bulls. But the only thing is that, for, let's say, in order to consider the downside, let's say, or at least a deeper correction to the downside, what we need here is a drop below this level right here. Let me just quickly highlight that for our future reference. This is what we need. Basically, we need to see a drop below the 1320, and then we could target the areas around the 1312 or 1310. But of course, the main target, if that fails, of course, if these two levels fail, then yep, the main target is going to be around the psychological 1300 level again. But again, for now, it seems that the downside could be slightly off the table. The only thing is that the downside could be just a small correction. But if, like I said, if this starts dropping below the 1320 again, then, well, I mean, we'll be very careful here, as it could open the path back down towards these support levels, which previously acted as good areas of resistance. So for now, guys, in a way, kind of what you could do is keep an eye on such a potential scenario here. Also keep your eyes on this level right here that I've just mentioned, the 1328.50. If it holds, that's good. That could be good news for the bulls here, and we could see this one maybe pushing back up again. Maybe this time, of course, we will test the recent highs near the 1344, but the main one for us is going to be this 1346, just a few dollars higher, and then yep, we will. That was the near the highs of February. So good potential target, but first, of course, we need to see that nice good rebound here from some of these lows here. So yep, for now, that's the situation with gold. Of course, don't forget that we do have the NFPs today, so that might move the dollar and move gold as well. So be very careful with that. And actually, in terms of the NFPs as well, just a quick mentioning. Of course, the expectations for NFPs are of course somewhat good still. I mean, they're slightly below the previous number, but still they're on the upside. The only problem is that on Wednesday we did have the ADP ADP number coming out, the US ADP figure that in a way sometimes could act as a gauge for let's say to know what to expect approximately on Friday during the NFP release, the main NFP release. So, but that number, of course, came out as a huge disappointment. So in a way, there is a possibility that we may see the main non-farm payrolls numbers falling below expectations. Like I said, given the fact that the ADP number was well below its expectation. But then again, of course, not always these two data sets are not always kind of going in tandem together. So that's why be very careful with that as well. Of course, keep keep in mind that the ADP number was very low, and but still the recommendation would be still wait for the actual number to come out. Okay guys, and let's jump into a few charts here with the pairs, and the first one here is GBP Aussie. Now a very quick update on this one, because I talked about this one for this week. Basically I was telling you guys to keep a close eye on this wedge formation, which this falling wedge formation, which tends to break to the upside according to textbooks, and we did get our break. The only thing is that it traveled higher, it broke above this level that I was talking about, the 1.8195 level. It traveled higher, but then quickly reversed, but still kind of balanced around this, and now it's acting as a good support. And the thing is that yes, we could see this one traveling a little bit higher, but be very careful for now, just because the push higher didn't kind of happen very quickly here, and didn't quite was that as strong as I was expecting it. So yes, it does have some potential to travel a little bit higher. The only thing is that what you could do, just for the sake of it, just for like peace of mind, wait for a break above the this level right here near the let me just quickly adjust this, and that's 1.8235 zone approximately there. Wait for a nice good push above it, and then aim for higher levels, because it could balance here, it can continue drifting sideways here for now, but if it starts breaking above the Wednesday's highs here, then yep, we could target this next potential area of resistance near the 1.83 zone, and slightly above that we do have the 200 EMA, which also could be a nice target for the pair. But again, for now guys, like I said, be very careful, be very cautious, wait for a break above the 1.8235 and then aim higher. For now, this is, like I said, we're going to remain somewhat neutral, even though it did break it in this formation to the upside, but just, you know, anything can happen here, and we could see this one reversing and pushing back down. So if it starts dropping below yesterday's lows here, near this one level right here, near the 1.8164-65, something like that, then yep, we could see a revisit of the so far the June lows near the 1.8129, but a break below that could send this one further down. So for now guys, long story short, basically we are being very careful here on this one. Yes, it did break this wedge to the upside, but it didn't have that kind of strong push that was that I was expecting it to do. So in a way, in order to consider further upside, a push above the 1.8235 is required, and if this suddenly reverses back down and drops below the 1.8164-65 zone, then yep, be very careful. We may see another leg of selling here. So keep your eyes on this one. Now USDCAD, very relevant of course for today. During the news we'll see how it's performing. Now just to kind of quickly rewind, I talked about this one this week as well, and what I was saying that if we may see kind of a nice rebound from this area near 1.3370. I mean, it did drop below that, but you can see quickly reversed and pushed higher, and I was talking about this area right here near the 1.3424. It managed to get a nice perfect touch here, but it never kind of closed the 4-hour candle above it. So as you can see, it sold off then. It sold off yesterday and traveled all the way here towards this upside support line that I kept talking about when I was covering in USDCAD. Now this upside support line, this, or should I even say upwards moving trend line, it has been running here from the lows of the 1st of February 2018. So a very important line. Now today, be very careful. Like I said, if the news, let's say today's news, today's jobs numbers will force the dollar, US dollar, to start selling off, then well, maybe we could see this one breaking again, and well, I shouldn't say again because we haven't seen that one breaking for quite a while. So if we could see a break below this upside support line of this upwards moving trend line, and the next target for us could be around the 1.33 zone. So good potential target, good potential support zone, could be a nice good test. But if that even fails to withhold, now I mean, with another potential area of support could be seen near the 1.3245, which is marked near the lows of the 19th of March. So for now, let's be very careful with this one. If this drops below this long-term upwards moving trend line, then well, this could end up being ugly for USDCAD. But if this decides to push back up here, pushes back above the 1.3370, there could be a chance to see a bit of upside here. The only thing is that still we'll remain very careful here because if we see a push above the 1.3387, something like that here, then this could maybe add a bit of more positiveness to this whole short-term outlook. The only thing is that ideally what we would like to see here is a push back above the 1.3424 zone. This way, and it may travel also above its 200 EMA by the time, let's say, if it gets here, then yep, could be seen as a positive move here, as a positive sign. But for now, it seems that the upside could be slightly off the table, but then again, wait for a confirmation break. So what we're going to be looking here for is initially the 1.3370. We'll keep a close eye on this one. If we do get a nice push above it, the next target for us is the 1.3387. But if that fails to withhold, now this is where it could become exciting again for the bulls. We will be aiming for the 1.3424. And like I said, in terms of the downside, a drop below this long-term upwards moving trend line taken from the low of the 1st of February 2018, then yep, this could be an interesting one to watch. And if we see a drop below this, then this could lead towards further declines. And the last pair I wanted to quickly touch on here, that's euro dollar. So euro dollar, so it traveled higher yesterday. I mean, this is a bit of a crazy move. So as you can see, initially after the rate decision, after the Mario Draghi started, before the announcements, before Mario Draghi started talking, so it did sell off initially, almost tested this downside resistance line that I kept talking about for quite a while now. It's a bit of a tentative one, just because we did have our break here on around the 21st of March, but then on the 20th of March, we had a break to the upside, but then on the 21st of March, it traveled back down and kind of respected that line and continued to respect that line, this downside resistance line. So it yesterday made its way to the downside, had a nice rebound from it, and pushed back up. So today what we're seeing here is a test of this key area of support, which previously acted as a good area of resistance, this 1.1260. Let's see if it can continue acting as a good area of support. If it does, then like I said, we could see a nice bounce here and a push higher. The only thing is, what we're going to do here now is let me just drag this level here, just adjust it, just for that better confirmation. Ideally, what we like to see here is a push above the 1.1305 and then aim for higher levels, just because it would confirm a forthcoming higher high, and we could then target the 1.1350 or even above that. For now, we're going to remain very careful because it's near this key area of support, near the 1.1260. If it suddenly drops below this, of course, this could be a bad sign for the euro dollar. But if it continues to slide below the 1.1245 area right here, let me just adjust this a little bit. So there could be a chance to see a revisit of this downside resistance line, but this time, of course, from above. The pair could kind of do the same scenario as it did yesterday, test it from above and then rebound. So that's why, from the very, very short-term perspective, what we're going to look here at is this 1.1245. A drop below this could increase the chances for a possible test of this downside resistance line again from above, and then we'll take it from there, see what it wants to do further. But for now, keep your eyes on the 1.1260 because that's where the pair is balancing at right now. This is a very key important zone. If we do get a nice rebound, stay cautious. We need to see a good break above the 1.1305 before examining further upside moves. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, and that's as always 13:15 GMT time. For now, I hope you have a wonderful trading day, and I'll see you later. Bye bye.